Hello there, good morning. What time have we got? Okay, 8:55. 35 minutes before the market opens. Plenty of time to figure out what's going on here. Doesn't look like there's really any good small caps moving, and the small cap market remains in a pullback. You can look at IWM in order to see that. That's the Russell 2000. Those are the top 2,000 performing small caps. So that gives you a pretty good sense of that whole market. And right now, although it's in a general uptrend, we're in a pullback and it just keeps going. So we're not in a push forward state. We're in a pullback state. So that's why a lot of these small caps are just not doing anything. And even when they do, it's going to be having turned back and around from pulling back. So that first day will be like so-so. But that'll be the beginning. And I don't know when that's going to happen, or if it's going to even follow through if it does. But if anybody's thinking day trading, there's just not a lot of beautiful opportunities right now because it's just not set up that way right now. But the growth market, stock market, essentially, we go after specifically the growth market, QQQ. It is making a new all-time high this morning, even as it slightly pulls back before the open. So it's been even all-time higher. But once the market opens, it will mark an all-time high. So, I mean, you're living in the highest valued stock market in the history of mankind today. You know, and that happens every couple of days lately, the way these things have been running. You should be soaking it up. You should be in positions, looking for your capital to be working for you, you know. And what was I just supposed to say about that? I'm not sure. I did have my coffee. Sell H starting to activate weekly reversal. Sell H. Okay, cool. Joe is talking about his. You can see the little conversation we were having there on the right side of the screen. Joe is is talking about Sell H up about 30%. Well, yeah, but I don't touch anything under the 200 SMA till it's back testing it after gone over it. Who's out there? Say hello. Who's out there? Anybody from class last night? How was class last night? What did you guys think? I mean, it was kind of a short one, I guess. I got super tired about an hour and a half after it, and we had to call it there. But hopefully it was informative and helpful to you guys. Sell H. Now, looking through the list here. Grr, Trug, Loop, SPI. Oh, I gotta start the Twitter right there. Shtoom. And beam up, post that out. Oh, that's an ended one. Okay. Where's my new live broadcast? Refresh. There it is. Ended. So stop popping that up. Okay. And post. You'll probably hear me. There it is. Told you. Post. Live stock market trading. And education, I guess I could say. What was that? Oh, there's a big like news alert there on Thinkorswim that I'd never seen before. Stock Matrix. No, Market. Economy and economics. Throwing a few hashtags in there. Okay. All right, so who's in here? Say hello. Alrighty, good for Joe. This morning, Marvell is up, biggest in my portfolio of, I don't know, I think I have like 70 or 80 stocks. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And I'm going to estimate from there. No, I'm going to count them. We have the time. 13, 16, 19, 20, 23, 26, 29, 30, 35, 1, 2, 3, 4, 5, 40, 55, 58. Okay, I got 58 pilot positions, so almost 60 pilot positions. Those are like starters, sprouts, beans. Good morning, Randy. I have 58 of those. And then I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 secondary doubled positions, I guess you could say, but they're 2 entry positions. They're called 2Es. I'm calling them 2Es because they've had 2 entries. They've stacked upon themselves. So 19 double stacked. So 59, what did I say? 58 starters. So I'm in a lot, you know. So I'm watching. I got my fingers all over this market. And I got 58 positions that are starters, that are little sprouts. And then I've got 19 positions that have grown to be in a larger pot, a small pot. And then I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 10 triple amassed positions. So those are snowball. I mean, we typically call those snowballs. It just, really communicates it best. We haven't figured out a better name for it yet. By the way, I think, I might rename the acronym or whatever that we're trying to use on this from amass to something else. I don't know what yet. I still got to work on it, but it's got to be something else. And the reason is because right now that stands for asymmetric momentum accumulation and scaling system. You see how long it takes me to think about what that stands for? That's too long. It should be the name, although the acronym can be clever, what you're trying to say with the name should also be easy to remember and say. That's just too much. It is true. It's an asymmetric momentum accumulation, scaling, and system. Why is it accumulation and scaling system? But that's just too hard to remember. Even I can't remember it, and I'm the fucking mastermind on it. So anyway, what is that total anyway? We got 58. Let's bring this little calculator thingy over here so we can see me typing it. We have 58 pilots. We have 19 of the others, and we got 10 more of the others. I have 87 positions. I have 87 positions, 10 of which are 1/5 of the positions as far as capital is concerned, you know. So you can see as they get bigger, you know, only 10 positions, the largest ones, the tripled up ones, are 1/5 of all of them. And there's 90 positions. So that should be 20. So that's how you can tell, like, the other ones are small and those ones are big, you know. But so that's where you want to be, you know. And eventually those 3Es, those 10 positions, like this one, Marvell. Oh, Marvell's way up this morning. Wow. Eventually these ones like Marvell, etc., these large ones, will get quadrupled up. You know. So it's a snowballing, amassing system, but the money comes from the skimming. Wow, I think I'm about to get a fill probably on Marvell. Look at it starting to push. Did I get any fills on Marvell at all? Maybe I don't have any orders on it. Let me see. Yeah, I have lots of orders, so how come it's not selling? Let's see. Oh, you know why? Because I've already hit those points a week ago. So it has to make new highs, and then it will start going through my 2-to-1 further. Here, I'll show you that on the big chart here. Anybody new to the stream, if you'd like to learn how to trade, hit me up and we could do a consultation session or private lesson. Just jump right into a private lesson, or get you set up for a slate of lessons. Happy to help you. Let's see, accelerate your path. So see, after doubling up over here, it then, you can see how my red lines started. This should be over here. Okay. Why is that extra red there? Sorry, just give me one sec. Is there some extra red there? Oh, it's trying to say, oh, okay. The little, what do you call it? Profit loss indicator in TradingView. That's this one. And it looks like this. It will show you a little bit of it'll be an extra red if you're down from your entry. And it'll be greenish if you're up from entry. But what you can see behind there is a hazy green and a hazy red. That's my risk unit area. So I'm halfway into my risk unit area on Marvell before it popped this morning. But I have previously taken out ding, 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 a couple of exits along the 2-to-1 there. So now all the rest of my take profit orders up the 2-to-1 are just sitting there waiting. So as it pulls back like this, and then it makes a lot of progress this morning, huge, it's up big this morning, and it hasn't taken any profits because it hasn't gotten back up and into my still open orders that are above where I've already taken profits. In other words, you know, depending on the market, if it was some bad times or something, you could definitely take profits when it retraces into an area you've already taken profits into before. But in a nice growth market like we have, you just want to wait until it gets back up there. Just sort of like a PCS. It's sort of like waiting for the week or 2 weeks or 3 weeks to go by before it starts to get back up there again and starts taking partials out. Now, when it does come up here, which is looking like it's going to break out today to new highs, I don't know how, is that all-time highs? Let me just double check. It is, pretty much. I'm guesstimating based on the last few years. But looks like new all-time highs could happen today on Marvell. You would move your stop to the bottom of this region then, 105. So, you know, that's an entry on Marvell with a stop at 105 for people who aren't in it. And you can likely get in this morning because this is, you know, breaking this little inner shelf right here on pullback is part of the signal. Like that could have been an entry, you know, and then stop here. And theoretically, by end of day, if it really was strong, you might even be able to select this as your stop, 10 and like 107 or something. But I would go with the 105. But see, my stop is currently 103. And it's kind of like in the right place. That's where my stop is right now. Right here. So it's not, I wouldn't see, if I raised my stop to 105, I might as well keep it at 103. Keep a little padding on. But if I raised my stop in order to buy more shares, in order to increase my leverage using my amass technique, so I would raise my stop so that my risk to stop is losing less than my risk unit, negative $100 in this case, then that means I can add more shares, so that the risk would go down to negative $100 again to my stop. Okay, but I may not want to do that. I may not want to add on to this position here, just to add what's probably going to be a 5-10% more to my position so that I can move my stop up a teensy. Because what I'm doing there is I've heard it called choking the trade. Like you're really getting your stop too tight. It's gripping the price action too aggressively at that point. And that could be fine if it put in a huge signal. It was catalyst day, which it might be today. We'll find out. But it will not be worth it for me if I'm only going to raise my stop $1 or $2 here out of $20 of range there. It's like, don't mess with it. So this is part of the finesse and the expertise side of trading. You're making minor, fine-tuned decisions. Because technically, robotically, you can raise your stop and add a couple of shares there, reset your 2 to 1, spread it out, set it all up, and call it a 3E position, tripled up position. But technically, you're only gaining a tiny bit, and you've moved your stop up only a tiny bit. And you're gaining a tiny bit in your in the positions. What's the word I'm trying to think of? In the positions, like excellence, like it's you're gaining a tiny. It becomes a little bit better. But you're moving your stop really tight, and that is only a minor improvement. So you're only getting things a little bit better and making things a little bit better. And that comes at more risk. That's really the thing. It's not more risk as far as like you losing more money. It is not that. It is more risk that the trade will not work out. It's more about the probability. In other words, if I raise my stop up a little bit, but not a lot, just a little bit, the benefit, that's what I'm trying to say, the benefit doesn't quite outweigh the increase in probability I'm pushing onto the position now that it will stop out. Even if I've only increased the probability that would stop out by 5%, 10%, 11% or something, I'm worsening my position for not enough benefit. You should worsen your position for a lot of benefit. When you raise a stop on something, in some sense, you're worsening your position. If it's a minor raise, and it should be for a great benefit, and it usually is not. So this is why you really need stops to raise up higher into your 2 to 1 range, or be a significant difference in order for it to be worthwhile. Like I would suggest, unless you can get your stop to raise one risk unit, and even that's probably not necessary, but unless you can get your stop to raise one risk unit, you probably shouldn't do it. But take a look at here on mine. For example, I got in here and set my stop down here. I don't know why it was the middle of that candle, but it probably made sense. I'm sure I did an analysis on that. A couple days went by and it broke out right here. Too soon for me to buy more, increase my risk, but I actually decreased my risk by raising the stop. So I was able to raise my stop and decrease my risk to stop and the amount of money I might lose should it go the wrong way. And it progressed, then pulled back, and then broke out of that new, longer resting period. And at that moment, I bought in more. That was when I doubled up and I raised my stop to the bottom of that resting period. Now, it was at that point that it made sense. My stop went up a good click, and it was a longer resting period. I got in. So then it did some movement before earnings and had a stellar earnings result, which resulted in a beautiful push day like that. And I could see pre-market that this particular level was an important level. And so I bought in enough shares to where my break even and stop would be that level. So now it's at zero risk. I mean, like right now, I have zero risk to my stop down here. Zero. It's a doubled up position. If I add today, that's something I could do is I could add to reopen my risk to a stop of negative 100. The benefit on that could be quite good. And the reason is the math on that. Let me show you. Let's go over to Marvell. I'm currently holding 19 shares at 104.95, whatever it is. Okay, so let's do the math on that. So 19 shares times 104.95789.474. I mean, I might as well type it, okay? And I'm going to add a certain number of shares. The idea here is to see how much I could add to where my cost average to stop, my new cost average to stop, would be no more than losing $100. Right now I have zero risk, but I'm thinking about choosing to increase that to open it back up to negative 100 again. And the reason is because the 2-to-1 skimming upside might be really tasty. I'm gonna do the math right now. Let's see. So let's say I doubled my position. Let's make it a little bit rounder number. Let's say I got 21 shares at the current price. That's 117.88. That would put me at 21 and 19, 40 shares. That puts my cost average at 111.74. 40 shares at 111.74. Now this is where you can do a lot of this algebraic math with a calculator, and it becomes kind of interesting. But just think about that in your mind. Now my cost average would be 111.74. If my stop is 105, that's $6 away. $6 times well, actually, that's my break even. So hold on, something's funny here. Okay. 104, 105. Yeah, I have my stop at my break even. That's crazy. Okay. So my cost average would be 111.74 if I doubled my position here. And 40 shares is what I'd have. 40 shares to my stop is about $6.74. And $40 times, 40 shares times that $6 is like $240. So that's like too much. But something's wrong with my math, because hold on, because even if I have $20, well, I can add 21 shares. That's just the long and short of it. So let's try 11. Divide that by the 30 shares. We get a cost average of 109.69. Okay, 109.70. So now we know to a stop of 105, which is the one we were just talking about, which maybe that makes sense now that I'm doubling up and I'm trying to increase my position size and leverage to skim some greater gains off of the 2 to 1. It's kind of like for free, sort of setting you up for free to just sort of skim up high at double the size. That'd be $4.69 of risk. So that's still a little too much. $4.69, because all I have to do now is I can just do the math here. Minus 105. Yeah, $4.69, and then that times the 30 shares, you'll be able to see, is $141 of risk to stop. So I can't even add 11 shares. So it's starting to become, to me, not worth the benefit, which was kind of what I was thinking. And that's probably a function of the stop not being able to be raised very much. So let's try 6 shares. That brings us to 25 total. That would be $77 of loss to my stop. I could maybe do that. And what if I left it at 103, which is where it is now, and had 25 shares? I'd have $126 of loss. That's an interesting decision. Should I choke the trade a little bit more and increase my position size? I'm only gaining maybe 6 shares out of 19. So I'm only gaining, it's really, you do 25 divided by 19. Well, I'm getting 32% position size. Another problem that you have to think about is that the risk unit is much bigger from the average, which would be 111. No, actually it's not. But it's good to think about this and double check on it. Actually, no, this could be a really good idea. The 105 to 111 $6 risk unit. Oh, no, sorry. It goes from the current price where you added, not from the cost average. To 105. See, that's the problem. 105 to 119 is $14 of risk unit. So $28 for the 2 to 1. 28 plus 119 is 138, 146 or something. Yeah, so whoops. Yeah, get off of there. 146 up there. And the problem with that, I don't know, actually that looks quite feasible. This is why you got to talk through these things. Anyway, we got 6 minutes to the open, and this Marvell presents us with an interesting quandary, sort of like borderline case of, do we add and raise our stop? We don't even have to raise our stop. Is it worth it? I think I'm going to leave it be. I'm going to leave it be. It's great stock. Let's let it do its thing. I'm going to leave it be. Let's not choke the trade. We still got plenty of 2 to 1 upside here. Okay, that's the reasoning behind it. So it'll be taking lots of profits if it's going to continue. We could hit those targets this morning. I'm going to keep it where it is. Let it breathe. It's going to create some new elevated levels and elevated base. Somewhere in there, eventually I'm going to have the conviction enough to raise my stop to a higher level. And at that point, it'll probably be a safer, less aggressive moment to raise the stop. All right, so that's what it sounds like to talk through and reason through those decisions on that particular trade. So That's why you like to watch the stream in the morning here. Look at the Marvell go. My next entry on that, my next take profit on that is at 120.95. Let's see where it is right now. 119. So only $2 higher, and you're going to hear it go bling in a little bit here. All right, so I've already looked at all of the small cap day trade opportunities this morning. GRRR, Loop, Trug, SPI. What else? And then now Wheeler and Avgo. So let's take a look at these. Wheeler, nope. Avgo. I'm probably up on Marvell's move. Avgo's earnings move. Let's go take a look in the grander scheme of things. And also on Avgo, what is the ADR? 3.2%. A little bit low, a little bit slow, but one hell of a motherfucking uptrend. Really great. It bounces right off the 200 every time whenever it gets in trouble. Pretty damn nice. And we're opening where? Wow. Way up high. Huh. So that could be a breakaway gap. We're going to be watching that. That could be an entry. Both a PCS, obviously, because it's in an uptrend at any time, but now that earnings are done, you got lots of runway. And then probably as a pilot position. I'd like to see how it moves once the market opens. Avgo. All right. Next, when we move down the list, Sense, Lysen, RH. So earnings pop also. 3.5% ADR. 442, way up there. Ooh. That is a bottom reversaling earnings result on RH. So that's a moment in the company's business cycle now that we've been waiting on since February 2022. For almost 2 years, here we are today, right now, in this moment, right now. After 2 years waiting for this exact moment. You know, so if that decides to run in the first couple minutes, maybe even by minute 2, if it seems strong, I will buy into it. But according to gap theory, it should sell off. There should be some profit-taking pressure. I'm taking a look at the revs. The revs are fairly even annually. They've been declining for the last few years, but now it must be looking like things are improving. Otherwise, it wouldn't have broken above this stage 1. Let's see what analysts say. We don't have a lot of time. 54 seconds. The quarter we have all been waiting for. Stock jumps. Maintained at neutral. Raises price target to 500 from 430 by Wedbush. Morgan Stanley keeps equal rate waiting. What the metrics have to say. Top and bottom line improvements. What I wanted to hear from analysts was, what do they think fundamentally? Is it about to go into a great period? All right, the market's about to open, but I'm gonna here it is. Market's open, but I'm going to read this a little bit again. Where was that? The quarter we've all been waiting for. RH earnings fell short of Wall Street estimates, but the company's earnings fell short. But the company's stock soared after its outlook blew past expectations. Yeah, so that's what maybe is going on. So what did they say about the outlook? reported strong demand trends so far in the fourth quarter and expects revenue to grow 18 to 20% year over year, a significant leap from Wall Street's previous estimate of 7.2%. And yet it's selling off at the open. It's the quarter we've all been waiting for. Forbes gains increased conviction in the business model and expects it to reach peak demand trends over the next 24 months. Well, so it's going to go into a 1 to 2 year appreciation cycle, but analysts don't put the target too high. But analysts are notorious for underestimating shifts. Notorious. It's like that's what you can expect. Have you ever heard of an earnings surprise? Where do you think surprises come from? Underestimating. Anytime you've ever heard of a surprise on an estimate, it's because they underestimated. They always underestimate. They never overestimate. They'd rather be surprised and underestimate than overestimate and be disappointed. So almost always analysts underestimate. And now Avgo is moving up. And RH is moving up. I'm going to try to get a position on RH. Looks like a stop of 430 would work. It's about 460, so 100 divided by 30. I can get 3 shares. All right. Do it, and let's do it fast. The order is in. And I'm filled. All right. Now we set up our exits and my stop. I'll sell 2 of the 3 shares up to 2 to 1 and hold 1 for stop loss. Just got a profit target hit on CLS, so we'll look at that in 1 second. And now my stop on this needs to be 430, so 429 something. Wait a minute. The risk to stop right now is only $20. I can get more shares. I probably should buy another share here. I'm still getting a decent enough price. Okay, I have 4 shares. $20. I still can get one more to have 25. To 5. Am I doing the math right on that? $20 to my risk times 4, 80. Yeah. So times 5, so I can get one more. There it is. Boom. Okay. So now I'll take those 2 orders out up to 2 to 1, and I'll set 3 for my stop underneath 430. 429.98, a little bit too close. 429.48 for another $2 of actual capital risk to have 50 cents more stop. I'm fine with that. Okay, I move that over to my pilots, and we're going to probably do the same on Avgo. Let's go take a look at Avgo. And we're going to take a look at Restoration Hardware in just a minute as well. Yep, there goes Avgo. That's what I thought was going to happen. Now, the stop could be 200, or I can be more aggressive and put it at 204. Let's take a look at what it looks like. Yeah, that's pretty insane. Let's make it 200. Let's give it some room to breathe. Avgo, I might even want to wait till after hours, until the end of the market day on this one, but I might just add at the end of the day. Okay, so we're at 216 right now. Avgo, 216. Stop at 200. Means like, okay, it's actually 214 now. Means about $14 a risk. My $100 risk unit divided by 14 is 7, so I can get 7 shares. Boom, let's get that order in right away. Come on, stage 2. Yeah. GTCEXT. Okay, where's my order? Yeah, I'm not getting filled. Got to increase to the. It didn't move me. Okay, there we go. Why is it not moving? Rejected. Doing. Huh, weird. Not quite the price I was hoping to get. I was hoping to get just a little bit better than that. It doesn't matter. It's $1 here or there. All right. So I need to take 4 exits. So I'm going to take 2. I'm going to take 4 1-share exits up the 2 to 1. So for me, on my $100 of risk, that'd be 1 every $50 of gain. That leaves me with 3 shares left to put on a stop loss. Of 200, I said. Okay, that's set. And you know what? I didn't mark up the chart on the last one or this one. So let's get those marked up because we don't like to come back to these later and not understand what we were doing. So let's mark those up. 215.34. So I'm in Avgo. I've got a pilot on Avgo, and I don't even remember what the other stock is already. RH. That's what it was. 215.34. Template. Break even. Boom. Copy paste. $200 for the stop. There we go. And the other one was RH. We need to set that. RH. You can see right there, 5 shares at 450.69. And the stop was 430. That doesn't give it a lot of room. It's going to have to perform today or I'm going to get stopped out. Those were pre-market lows, pre-market pivot lows, baselines that I picked that stop out from. But it might not be enough. It needs to follow through. All right, moving Avgo into my pilots. And then we're going to go look at positions such as CLS, which is doing well. Yeah, very nice. So the question is, should I add and raise my stop? No, I'd like to keep my stop where it is. My break-even is over here. And okay, and we're just beginning to start to take profits on that. So I'm going to probably let that run instead of adding and increasing size or anything like that. Palantir, backfilling in nicely. Now let's go back to things that are pulling back and double check that on the unhealthy positions. TPB? So this one is something that my worst performing position of the day, and it looks like it's just charging like a bear. I mean a bull, charging like a bull, but it's really charging like a bear towards the stop down here. Probably going to get stopped out on TPG. And looking at it, that may be a topping sign. All right, I'm going to let it play out. It's just a pilot. Larger position pulling back a little bit today is Aris. We just got an alert on Riot. I have Riot in, is it doubled up positions? Singled up? Do I not even have Riot? Where are you, Riot? I might have got knocked out of Riot because I'm not seeing it in my positions. I don't have Riot? Thought I had Riot. I've read it. All right. Oh, that's why I set an alert. Guess I got knocked out down here. And now it's reclaimed. It's just been such a mess. You know, like, look at that. It's just so messy. And it's chopping through the 200 moving average. Such a time. I might even stay away from Riot. Let me take a look at MSTR, which is another one that's similar to Riot. Yeah, that looks so much nicer, so much better. But I do think I have MSTR. Yeah, MSTR is my second best performing pilot position right now. So I'd be looking for an ad above here on MSTR when it happens. But it's not happening yet. All right, going to my largest positions, obviously we're talking about Marvell. Marvell's doing okay. Very nice. Going to get close to taking some additional profits pretty soon on that one. IJIC, I'm going through my largest positions right now. IJIC, I had such a little small risk unit. Definitely hit all my 2-to-1s. But it would be nice if it could perform, if it can curve back up and around and continue. But apparently not. IonQ has bounced right off of my stop. Thank goodness, didn't get stopped out. And hopefully it'll fill in and take off again in a month or so. Reddit, continuing, excellent. I wouldn't raise my stop. It's in a rally. The best spots to raise your stop, unless the thing is going parabolic, perhaps you might want to just like start choking the trade off and get it really, tightly trailing it. But if it's not going parabolic and it's just sort of doing its natural ascension, then you probably should wait for long resting periods to give you your pivot low to raise stops to. So Hood, so we won't raise our stop on that one. Hood, yeah, we're going to keep that breathing as well. IREN, well, I like to see that perform a little better, but ever since I doubled up on it, it's in my tripled up folder for some reason. Okay, I guess I tripled up on it. Ever since that point, all it did is pull back. So hopefully this thing will start to find some support and eventually take off again. That'd be nice. In the meantime, I do have a larger 3E position in that one. App, hoping it finds some support and does the same thing, eventually takes off. CNVS, we just added to that position yesterday, at the line of least resistance there, $4. I was able to raise my stop a little bit, still keep it at a nice conservative level so I can stay in. Brought my break even up, increased my position size, set up that 2-to-1 on the now increased position size, and that's good for that. GGAL, G-G-A-L, that's one of my larger positions, just hit a profit target right there. I currently have my stop right here underneath this area. And the question is, should I raise my stop to this area? And like I said, there's not really a resting period. There hasn't been really like a pullback type resting period like this to really say that we're coming up and out of a level that it's not going to go back to. What it's been doing now is been doing that folding action I was telling you about before, where the pullbacks are folding back to previous price levels. That can be dangerous with a tight stop because it can then top out at one point and then do this kind of a thing and maybe do it twice, and then now you're stopped out if you didn't have your stop at a decent enough level. As far as position trading goes, swing trading wise, you can keep your positions on a tighter leash. That's GGAL. And the other one I wanted to look at was Tesla. All right, Tesla is doing great. So all of my larger positions are in fairly good shape here today. Now let's go through my second largest positions. NN doing the worst, and it's doing just fine up at break-even area. Aris sitting in the middle of my, well, actually it's all profit. Everything above the break-even and stop there. But it'd be nice to see it take off and not stop out either. Unity pulling back into my break-even. Like to see that one perform as well. Woo! The market is just on fire this morning. Lightning bolts of price improvement. Outstanding. In a moment here, then, we should look at stocks that potentially we should be getting into. Maybe. It depends on how they're set up. This market is extending, but you know what? I think it has room. Unity ET. Okay. Snow. Like it's doing fine. Snow doing fine. AHR. Yeah. This one's trying to stay above its 50 moving average. The new healthcare REIT. Square. Yeah, I do like the fact that my stop is way down here on Square because it's doing that folding action, not really running action. Like when you look at Square, like where did I get price improvement? From basically one bar. Everything else has been just trudging along type movement. I had a little push there, but it was through trudging along. So this is like the only good bar in all of its history on this chart right here, like a year's chart, or actually it's only like a couple of months. So the point is, you have to understand, you have to know that, realize that about the ticker, is that it does not really provide anything too wild. Which means it can also snake around. And so that's why I want to give it a little bit more leeway if you want to stay in it. NNE continues to pull back. Hoping it will pick up and break out to new highs in a month or two. That'd be nice. Geo. Had one good day. And it's been high tight flagging ever since. See where it goes. We're definitely in that one. Doubled up position. GoDaddy. Just a beautiful lightning bolt of a rally. What I did there is okay, if you look at it really closely, the reason why I raised my stop here. I'd love to see if you could figure that out, Randy, or anybody watching. Why did I choose to add here and raise my stop? Because it's really worked the other way around. Why did I choose to raise my stop there, therefore allowing me to add? Anybody got any idea? Original entry was here, where I put my stop under this pivot point. But like I was just saying, I don't want to choke off trades. So I don't really want to raise my stop on a little V here. So then what was it that gave me the conviction to raise my stop to this level and therefore allow me to add on that day? And you're lucky because you get to see it in hindsight a lot better. But when I entered here, the correct answer was not yet fully known. It was a guess. But I was making a pretty good guess. Anybody? Well, all right, I'll tell you. I waited long enough. It's because this is, whoa. This is catalyst day type of behavior. This is a big move. And usually on catalyst day type behaviors, you're talking about a never look back low. So I figured I gave myself even an extra day's worth of a pivot low there of a stop. So I had many reasons there for picking this stop, when really probably this was the real point that it's never going to go below again. And sure enough, I entered here, and sure enough, by the end of the day, it had put in that larger candle. And I knew it was going to project like that because of the way the pivot points were trading intraday and the day trading side of things, and how much volume was going on. Volume was looking good, although in retrospect, it wasn't like, extraordinary, but it was higher than average. Average was right here, higher than average day by almost 60% RVol. All right, we're going to look at some other opportunities, but let me finish going through my doubled up positions and make sure there's no add-ons or raise stops that we need to be doing. DJT. All right. AFRM. Okay. Q2. NRG. The best days to add, the best ones, are not on just a breakout, but are on like a catalytic move, a huge move. Is catalytic the same as catalyst? Catalytic. No, not converter. I don't know. Just the word catalytic. Relating to or involving the action of a catalyst. Yeah, a catalytic move. So like if you're looking at this chart, A-Lab, where are there any catalytic moves? And it turns out exactly where, I bought in. I mean, actually added. Right here is one. And I bought in before it broke out, even up to new highs. I bought in here when it made a new, that was my first entry. But right here as well, obviously on huge earnings volume and earnings day, that was a catalyst. This was also a catalyst day, because look at the volume compared to average volume, which is way down here, and even the highest RVol days. This was like 400% RVol day, breaking out of a level up there, so you can assume a never look back no low entry. And that would have worked out. And if that was your entry and this was your stop, your 2 to 1 is like right here. So you already hit all your 2 to 1. You'd be up almost 5 to 1 by the time it hit this little point right there. 5 to 1. Then it comes back down, puts in kind of this basing action, and then you could choose to add here, but I would not, because earnings was coming up. I would use your padding in your favor, so in case when earnings comes up, price were to drop back down to your break even, you're safe. Why exacerbate things by adding and increasing your stop or something right there? So don't do that. Just wait it out and then add on this day. So that would be the technique on that. But you can see the catalysts are here and here. And then it had a catalyst-like day here. That was like a good day. So if you're really looking at the charts, in all of this area, it had 3 good days. Increased volume leading to breaking the pivot high. Yeah, the leading, you didn't know that when you get in though. But yeah, in hindsight. That was ALAB Palantir. Okay, and then CLS. Yeah, so CLS broke to new highs today, and I think we already talked about this, and we're not going to raise the stop on that. We're just going to allow it to drip down its drippings, its profits, as it continues. Faro, I think, is one of my pilots. Let's see. Faro, it just hit an alert. I'm not seeing it at the top of my list. It might have hit a stop. Let's see. Where's Faro? Did I get out of that? I just saw Faro, I thought, in my positions. Do I not have Faro? Let's see, where's Faro? Faro, I do have Faro. It's not at any particular point, I don't think. Let me see. Oh, add and raise stop. Okay. What? Oh, it came back. I have 2 alert lines on this. So which one? Add, raise stop. But I didn't the other day because I was going to wait to the end of the day. Looks like I wouldn't have. My stop is way down here. I think my idea was to add up here and raise my stop to 25. But I need kind of a conviction follow-through day for that. But you may not be aware of this, but now that it's pushed up like that and broke out but came back down, that does set it up for what's called backfilling. So it might do this kind of a thing. So even though it's not a conviction follow-through yet, it's set itself up for backfilling. So potentially I could be getting in here today, adding on here today, raising my stop down to here with the understanding that if this thing behaves properly, it ought to backfill. So do I want to do that though? Is the question. And probably I can tell you that if my old stop was here and I'm doing all this fuss to move my stop up to just there, we did the math on that other one, it's just not going to be worth it. If I was able to move my stop up to here, that pivot, oh, I would definitely do it. I would take action. But for that, I'd need a big green catalyst candle. Like, I'd need today to look like this, following through on yesterday and be just super strong to say, okay, I'm carrying you up here, and maybe tomorrow we'll even have a little follow through. Then we're going to have a doji, and then we're going to pull back, and then we're going to rest for a while. We're going to have a new base. We're now at a higher level. We're going to hang out here for a while. We'll build up, and then maybe in a couple months we'll keep going. But for sure, we have this never look back low that we would hit there, and so therefore this stop at 27 being raised to 27 would make sense. And so I could add like up here. So maybe by the end of the day, if we look at it, maybe it will have filled, but I don't think so. I think it's wanting to pull back, and that's what I just described is not what's going on. This is not the backfill. When I drew this arrow here, if you don't understand what backfill is, that's not backfilling is when prices come down and then it fills in the hole with upward movement. That's what backfilling is. It's like, whoops. It's like, back fill. All right. Anyway, Faro. Okay, now new position wise, let's take a look at a couple and see if anything's beautiful and at a good point here. AUR, not really. Futu, not at all. Mod. Okay, this mod has been moving nice and smoothly for a long time. Probably a perfect PCS type of situation. How many days until this ER? As far as PCS goes, it has something like 45 days. It's got plenty of runway for you. But as far as pilot trade goes and or getting into it, I don't know. Probably not a good shares trade, MOD. No, but I do love this beautiful run it's been in. However, that momentum has slowed down. And it's getting kind of toppy. It went on beautiful run here. Beautiful price improvement run here. A little bit of a base. Oh, it's been kind of toppy. So I'll stay away from that. MOD. Marvell is number 4. We already did our thing on that. Hood is number 5. And we're already in that. Gigel is number 6. We're already in it and making money. Mara is number 7. And I don't like the way that looks. I'd rather be in MSTR. And I am. VST, I'm already in it. Okay. FN. That's just too much volatility, guys. You can't be looking to get into things that have this wide of folding. Remember I talking about folding? You're trying to keep your stops really from preventing you from losing more than 3, 4, 5%, 8%. These distances, 278 to 201, that's a 28% volatility range. Those contractions in the size of the volatility is 28%. That is unswing tradable. There's no, unpositioned tradable. You could swing that essentially by doing the ping pong, but you'd be scalping, and that's a little bit dangerous. Go EV or something, GEV, GE Vernova. Okay, I'm in that. It's having a good day. Oh, here's the smaller cap we've seen many times. AAOI. I don't have this right now. It's showing that I do. Yeah, I got knocked out of it over here. I just hit another profit. I just hit first profit target on Marvell. Let's go look at that real quick. Yep, boom. These are new highs. So new all-time highs on Marvell. And I don't even know these companies. I understand fundamentals, but I mostly understand technical analysis. And that's 99.9% of what you need to know. So, and the tickers change over the last 26 years. I don't remember necessarily what I traded. It's all been charts and tickers. The ticker is just a gateway to the money, right? So I don't even know what Marvell does, but from what I understand, I believe they're in chips. Now, somebody else here listening or whatnot, they may know exactly what Marvell does and be like, you idiot, it does this or whatever. Well, you don't want to call somebody an idiot just because they don't know what you know. Now I'm criticizing a fictional character. What'd you say? Increased? Okay, I've been watching Gigel. Is this another example of folding back prices? Probably. Maybe that makes it okay, though. It depends on the trend. Good for a PCS, though. I don't know. Gigel. Let's see. Kind of. It's nice and orderly. I kind of put this in just continuing to rally mode, but yeah, it is doing the folding. Making higher prices, on the top side, well, it's been happening. But, it's not really friendly when it does that, but it does have its runs. Bounced off the 200. If I showed you that chart like this, I don't know if you would have thought anything of it. But what have I told you before? Any reclaim or bounce off of the key moving averages, like the 200, you should buy it. You don't know where it's going to go. You don't know if it's going to really happen. But if it's already been uptrending and it's something that's been happening, the first time or on the rare occasion that it hits the 200 and it has some kind of a positive, once it's hit it, that can be an entry. And look where it went. Can I just go like this? No, it doesn't. How do you make it now? Go forward. Forward. play. Forward is shift, right arrow. Okay. There we go. Look. So now from $27 entry with a $24 stop, this is how it started to perform from there. Look at that. What a bounce. You want to talk about eggs versus tennis balls? Whew. That's a heck of a tennis ball. You should be able to see that even in those moments, maybe even on this day, but certainly by here. The writing should be on the wall that this puppy is a tennis ball. It's a bouncer. That means when it pulls back, it wants to get bought up. Hit 45, hit 47, hit 49, 51, 56, 55, 58, 59, 60, 61, and 62. That's where we are today. It's good stuff, you know. Certainly good for PCS. But a couple seem to fold back. Yeah. Folding action is not bad. It is folding action. It is just what it is. It just means it's not rallying, but price is progressing. There's nothing wrong with folding action. It just tells you, though, that it's not running. You know, you had that kind of happen in here. That turned into like a base downtrend type of situation. And then that bounce was so strong off of the 200. All right, and that would have looked a lot stronger because see that how vertical that looks. When you look back on it, on a squished out chart, after it's performed so well, this doesn't really look like that big of a deal. But relatively speaking, at that time, that was some of the strongest price movement it had seen in over a year. Very nice bounce off the 200. Let's see. That's what was that? Gigal. So anyway, I was answering your question there. SGMO. Yeah. I have to look at the dilution on that one. That looks a little shitty. 5%, 14%. No, they're not really killing you. It could be traded, a swing. It could be held. It looks like it's bottom reversing. I'm not sure how much faith I have in this level holding or this level and it doing, you know, progressing. But from what we know about theory, about price action theory, is the left side is of a base is chaotic, and as it starts to become orderly, that's usually when it starts to make price progress. The question is, has it started to become orderly, or is it still too chaotic? Let's take a little bit of a closer look at it. I think it's becoming orderly. I'm going to get it. I'm going to start a pilot on that SGMO. And I'm going to put my stop here underneath 180. That's probably pretty tight. But I'm going to go with an advanced reading on it that we're becoming orderly and we're actually going to make price progress. So 180, 215 is 35 cents. $100 divided by 0.35 is 285 shares. Buy. And let's see if we can get a fill in here at 214. If not, I just pop it right up to 215. It's pretty tight, 1 penny wide bid and ask, which is always very good. Giving it like 10 seconds. And there's a lot of demand at 214. I'm going to go to 215 and just get the fill. I mean, it just doesn't matter to me a penny here or there. Okay, so I'm in. Now, actually give me 214.88 fractional shares. So anyway, we write that in. There's my entry. And I'm basing my stop on this whole area under here, 180. I'll probably try to make that like 177. And so we're talking about 140 shares that I need to get rid of across the 2 to 1. I'm trying to do the rough math in my mind. 140 shares divided by 10. It's be 14 shares every 1/10 of the way up. So that's what I'm going to do. There's a lot of different ways you can slice and dice things. I mean, I could do 14 exits of 10 shares. It just depends on what lines up mathematically and how you want to do it. So every $20, I'm going to sell 14 shares. Setting up my 2 to 1 on that. This is more of a penny stock. A little bit more of a penny. It's $2. But it looks like it's on kind of the good side of the spectrum, though I wouldn't say it looks beautiful. It's interesting, though. It's worth a pilot position. All right, I set those up. I have 140 shares to exit, and so I'm going to do the remaining 145 shares. Stop at, what was it, 177, which will be negative $107 of loss if it hits. This stuff doesn't have to be perfect, you see. All right, so we let that sit and bake for a couple weeks. Move that up to my pilots. Now we're talking about baking. So if it's not a greenhouse, a garden with sprouts, now we're talking about baking, preheating the oven, cookies, I don't know. And then we got snowballs. The analogies never end. So that was SGMO. That was interesting. QURE. What are you doing there? Yeah, it doesn't look right. That looks like a buyout or something. What's going on there? Price target to 440. No, that's on RH. Sells 100,000 shares. Selling 1.5 million shares. Maintained at neutral. Maintained at outperform. Outperform. Soars on FDA alignment for speedy approval of Huntington's drug. Yeah, I really hate the biotechs, you know. And this one looks like they love to sell into every positive news. I don't think so. We'll stay away from that. Watch biotechs, guys. Stay away from them for the most part. You'll be making the right decision in life if you just didn't know why and you just listened to me and you stayed away from them. That's a lot better. And someday when you're smart enough to think you can change that and make an exception, go for it. But until then, just stay away from biotech, guys. Rocket Lab, I am in that, and it's doing well today. The question is it an entry? I mean, for a PCS, it probably could be. And it's been in a okay trend for about almost all year. It's not really consistent. It's gone wild. It's not wild and crazy and chaotic, but it's, you know, explosive. And it did come out of a stage 1 after IPOing in 2021. It went into a stage 1 for about 2 or 3 years there. And it's been this year that it started to shoot out, to rocket out into a stage 2. And so the volatility has been really increasing. But the thing is, maybe, you know, it might be good for PCS. Certainly is good shares-wise. But the reason why I say it might be good, because, you know, this IPO and it's hitting new levels that it's never hit before. And so, of course, it's going to have higher volatility days than ever before. This is nice and measured days than They had apparently some kind of decent earnings report came out because it curved back up and around and continued. It's you can make that decision for yourself. Rocket Lab, Dave. Upstart. Do I not have? Did I get knocked out of that? Why do I have? Oh, I exited. Why did I exit? Oh, it was just such a strong pullback. But I could have stayed in. How about that? Template, sell. I want that to be red. I got out prematurely and would have been just fine. That's the power of the stop. I did not get stopped out, but I exited because I just didn't like how strong it pulled back. But I should have stayed in. It's Upstart. Upstart's been pretty hot for the last few years. A very interesting stock. And it didn't hit my stop. So I shouldn't have exited. But I did. Sometimes that happens. Anyway, it looks like one could get in today. And by the way, it's perfect for a PCS. You just have to check the chain and liquidity. So 84 here. Stop at... Yeah, I'd keep it there at 64. Damn. It's kind of a wide stop. Hold on. 64 divided by 84. That's like a 24% stop. That's not going to allow me to get a lot of shares. So 64.84, it's about $20 risk. I'll be able to get about 5 shares. Well, it's Upstart, so you got to take a position in it. So I will get those shares right now and start to build a position over the next year or two. See if we can snowball something good here, because Upstart, people love this. It's just like a Tesla of whatever the fuck it does. Nobody really even knows what Upstart does. I'll take a look in a second here. But people just the traders really like this one. Surprised I didn't get a fill just now. Wow, I think the price is really just getting carried away right now. I'm going to have to chase it a little bit. Come on. Wow. Price is really moving up fast. Okay, now I'm in the middle. What happened? Okay, because I already got filled. It's like you can't move the price because you already got filled. So now I'm going to move this break even. I'm going to keep the stop where it is, 64. But I'm going to put a new position marker here. Look how wide that risk unit is compared to before. Would have been just so nice to just stay in. I should have done that. Very important for you to realize for yourself when you should have did things, so that in the future you remember that and you do it right. I should have just let it stop out if it wanted to. I got lots of my 2-to-1. In fact, I hit all my 2-to-1. So I think coming back down, what I did is I got out at break even. That's what I did. I didn't need to do that. The stop was fully subsidized by the 2-to-1 exits that I hit. Oh well. Anyway, I'm back in now, and I do need to set up. I'm going to take 3 exits up my 2-to-1. So that'll be 3 1-share exits up my 2-to-1. So at $66 for my $100 2-to-1 exit would be my first 66, and then $133 again, and then $200 again. So that's 3 of the 5 shares, and then the other 2 I'll put on stop, down at the stop, 64, 63.89, 63.39 would even be minus $99. So I'll put it at 63.89. It's sort of like giving myself even an extra $1. It's not even at 64 my stop. I have it set at, well, actually I think it did set it there. Maybe it moved. 63. Oh, I did. Okay, never mind. Yeah, so anyway, it's perfectly placed. And we move Upstart into my pilots. So we've been getting in some new positions today. Fun and interesting. The market itself, It's doing about an 80% retrace so far, so that's not a lot of strength, even though, but it did make a show of strength. And overnight, it did quite well. Perhaps it's coming down because rates are continuing to go up. The rates have been going up lately, and it's kind of weird. Yeah, rates are still going up. It's crazy. This is just a great opportunity, though, if one wants to get into Treasury bonds, to get 30-year. I've been buying at different levels that are up here, and I have my cost average around 4.21% yield now. But you can get in for the first time fresh at 4.6% for 30 years. That's great. And remember, when rates go down to, say, 3% or 2%, or if there's a market crash or an economic crash, then the Fed usually lowers rates to 0% or 1%. You will double or triple your money instantaneously when that happens. It's because the face value changes. But in the meantime, you're still getting 4.6% on your money. And Treasury bonds are 80% marginable, whereas stocks are only 50%. So you can sort of use them as the backbone of your capital and then margin trade against them. Swing trade, margin swing trade against them if you're a profitable trader. Knock on wood, educational advice only, not financial advice. And not official financial advice. And what I was going to say is you can also use Treasury bonds as down payments collateral on, like, buying a house, like a mortgage. So you can be getting 4.6% return whilst telling the bank that they can have those bonds should something happen. They can use that as collateral. So that's crazy. If you ever put money down on a house and thought, man, I wish that money was working for me, that's a way to do it. But you need to be with a brokerage that can provide a mortgage and offer that service and use them for that and have them use the bonds as the collateral. It's kind of a cool little trick. So that way your investment money is still working for you while it's sitting in the foundation of the house. All right, see you later. Okay, well, everybody, I'm going to check out now. Thank you very much for tuning in. This looks like a very interesting, nice, friendly day on the market, but it is a Friday. So, manage your positions and manage them well. Ooh, I think that the RH might be getting close to my stop. That's the new position we got in. That didn't really follow through very nicely. And the other new position was... I don't see it. Probably hasn't moved much. What was it? I almost could think of it if I try to use my memory, but I'm just going to run my eyes down my list here until it pops up. Oh, we just got an SGMO, yeah. Weird. RH. There was something else. Oh, Avgo. It's doing well. It's at the top of the list. Oh, yeah. But I only have 7 shares. But probably I'm going to get some exits on that. Let me see if I even got an exit. I've had 11 fills this morning. No, I haven't hit any of those Avgo exits yet. But all right, guys. Nice day, Friday. Oh, I won't be back until maybe next Friday. And even next Friday, I might not do the stream. So I will not be doing the stream next Monday through Thursday because of travel. I'll be checking in the group. And if you have any questions, you just post them in the group. And when I check in, I'll answer them. All right. Have a good everything, everybody. Bye-bye now.